hybrid. Yeah. The hybrid. Yeah. The hybrid. Yeah. The hybrid.
Welcome back, everybody, to the latest episode of The Hybrid. If this is your first time listening, thank you for finding us. As always, I'm Shawn Collins, here with my co-host, Erik Gundersen of ERG Strategies, coming to you from Maine. And on this show, we're going to spend some time at the intersection of policy and markets and the real mechanics of regulated industries, especially cannabis, hemp, and the business realities that shape both of those spaces. So over the past decade, the cannabis industry has gone through several distinct phases. First came legalization and the rush to build entirely new markets. States like Maine and Massachusetts, and Erik and I issued licenses, and entrepreneurs raised capital. Operators raced to stand up their businesses in a regulatory environment that was evolving and frankly still evolving in real time. Then came the expansion phase. New states are coming online, capital flowed maybe a bit more freely, and many companies built their strategies around rapid growth and the assumption that federal reform was coming any day now. Today, the industry seems to be in a different chapter. Markets have matured. Wholesale prices, depending on your perspective, have compressed or cratered. Capital is harder to access. Taxes are still high. Regulatory costs remain very real. The operating environment has become far more demanding for many businesses, even well-run ones, frankly. That math is getting even tighter. When that happens, the industry runs into a part of the business cycle that doesn't always get the same attention as the growth stories or the new market launches or splashy fundraising rounds. Think distress, restructuring, and sometimes, yes, receivership. Those situations are complicated in any industry. In cannabis, of course, they become even more complex because every company is operating inside of a state licensing system that is layered on top of federal illegality, shifting market conditions, and a regulatory framework that's not always built with distress in mind. So today we're going to be talking about exactly what actually happens when cannabis businesses are hit with serious financial trouble. What are the warning signs? What options do operators have? What's the role of regulators, courts, lenders, investors, turnaround professionals, when all of this is a licensed business that needs to stabilize, restructure, sell its assets, or just find a path forward? And to help us unpack all of that, we are very excited to be joined by Jacques Santucci, the founder of Opus Consulting, a firm that has built a strong reputation advising cannabis businesses on strategy, restructuring, and yes, receiverships. So, Erik, before we bring Jacques in, let me start with you. You and I have talked for a while now about how this industry has moved from the early build-out phase into something much more mature, more disciplined, and a little bit less forgiving. When you look across markets that you're working in, first off, good to see you, I think. And sorry about my behavior in our last episode. But does it feel like restructuring and distress are now becoming part of the normal business cycle? Do you see that in your work at all?
Well, I think I see it in cannabis in general. We're just entering that phase. But if you're talking specifically about the states that I work most closely with, like, I'm fortunate enough that I get brought in during the honeymoon period. I'm still mainly working in the setting up a program, new emerging markets, getting the first round of licensing out, which is a really nice place to be. It's fun and exciting, but certainly we're seeing on the national level, some of these states that have been up and running for a long time, they're starting to transition into, they're starting to transition out of that honeymoon period, just to put it nicely. And it makes total sense. I mean, we've talked about this multiple times in the podcast about the fact that the economics in these state siloed cannabis systems aren't set up to make sure that everybody succeeds here. I mean, we're talking about we're now in a world where there's limited capital. They still have incredibly high taxes. I'm sure we are going to get into the Schedule 3 stuff. The siloed state markets, the legal cannabis alternative options in hemp, and all this stuff is stacked against these operators. So it makes sense that we're seeing this, but I'm glad we're having this conversation today to figure out what everybody's role is. Like, what's good, what should be happening, what could be avoided. And of course, we have the man himself here that can help answer a lot of these questions. Because I'm sure a lot of our listeners, this is the first time that they've heard or had this conversation. So, yeah,
Well, and I think for a lot of our listeners too, there's assumptions that are made about these are
Yes.
businesses. These are normal businesses. And we're going to find out today that they're, as much as they are normal, they are very much not normal, particularly within the legal confines that they live within. And so, Jacques, that obviously brings us right to you. And I'm really, as Erik said, we're excited to chat with you. Have been a sort of an observer of your work for a number of years now, and obviously seen you in multiple jurisdictions and doing the work that you do with your team. So before we get into the mechanics, though, of a receivership and distressed cannabis businesses, I would love if you could just give our listeners a bit of your background and how you came to build Opus and
Yep.
carve out this really interesting but a very important and increasingly important role in this industry. So welcome, thank you, but also we'd love to get to know you a bit more and learn how you ended up with us today.
Yes, exactly. Well, Shawn and Erik, thanks for having me today. And I really enjoyed the previous episodes and the interactions between the two of you. So I think you get something coming up. So yeah, let me
You're the
introduce
one. We
myself.
found the listener.
yeah,
Yeah, that was me. Well, when you travel too much, you got to download some podcasts, and
That's right.
There you go. I found mine.
Oh, it's our
Yeah, so my
wheelhouse,
name is Jacques
travel.
Santucci. I'm the president, founder of Opus Consulting now, 17 years. But I've been a turnaround and business management professional for probably 20 years. And if I think about it, even the jobs I had before as CFO, president, they were all probably also in the same kind of directions. And, I'm with solution finders and Opus Consulting guides of the cycles you just mentioned on the honeymoon part that Erik was talking about, and on the other side of the honeymoon. I came up in this line of work as a turnaround specialist. I'm involved with a few associations around turnarounds and bankruptcy. The Turnaround Management Association for over 20 years, the American Bankruptcy Institute, and so. When I started Opus, the idea was let's help businesses resolve their struggles. So when a company goes and up and they're looking to grow, they need help figure out the cash flow. They need help to figure out their business model, how they're going to do this. And of course, they have to know their industry, but usually it's the non-industry part of the business that they need help with. And so we came in as the financial management and strategy management part of it. And then we started to grow in that direction with the turnaround and restructuring when the business is starting to feel some pressure. And then we apply almost the same tools, but we applied, we assess, we listen, and we look at the cash flow and we help them with the situation. So agnostic of any industry, that's what we do. And a lot of people, and for sure in your podcast, knows us and knows my team for the work we've done in the cannabis for now the past 15-ish, almost 16 years. But we also work in other industries, hospitality and restaurants, manufacturing, and things like this.
It's interesting that to see the different industries you might work within, but I think a lot of our listeners obviously are focused on cannabis. There's a lot of parallels between hospitality and cannabis naturally,
Yes.
but of course there's a lot of pretty important legal distinctions between those spaces, and I think obviously a lot of nuance between them. Um, but in every business, there's going to be things like warning signs and pressure and all these different forces that you as a turnaround specialist, as an advisor, and now in cannabis as a receiver, you've got to assess. So I'm curious, when you see cannabis companies and they're under this pressure, where's that pressure coming from? Is it things like mismanagement? Is it structural pressure,
Yes.
the industry itself? I guess if you can help illuminate that for us, what you see as being some of those pressures, if they're unique to cannabis, that's great. But otherwise, too, I'm sure there's some evergreen issues that businesses confront.
Yeah. So let me explain the background on how we got to cannabis, so I can explain how I see those points. So I didn't get into in the cannabis industry on purpose, right? As a consultant, being in Maine with Erik, I was part of a group that applied in 2010 to the first licenses in Maine. And our group got 4 out of the initial 8 licenses in Maine back in 2010. And at the time, there was no Massachusetts, there was no New York, right? We were the first state to be pioneer, and really pushed me in the cannabis industry as a pioneer, because then the group needed to raise money, needed to get going, and not coming from that industry, coming from experiences outside of that kind of unknown territories, our group had to start a company from the ground. And so talking to regulators, but also talking to banks, talking to payroll companies, and reinvent things, right? And then convincing banks and payroll companies and insurance companies that they needed to work with us. Long story short, we got 200 employees, 4 stores, grow, extraction, the whole thing. So not only at that time I was a consultant and my team and consulting practice was growing, but also we were operators, right? And half the team, if not more than half the team, has been part of this project or another project on the ground, looking at how we're going to make this happen, right? And we've seen it all. And going back to 2012 and 13 and 14, we had all the things that maybe one day I should write a book. And so
we'll have you back on when you do. We'll
Yeah.
definitely always welcome back.
So then we from there, right, we started to see that industry, just like any other industry, would have up and downs, and it will be cycles. From an operator standpoint, we did what we had to do, and then the company, went its direction. I was involved in a few projects, but from a consulting practice standpoint, realized that there's a point that doing licensing, doing business models, telling people what they should do is not going to work, because people don't listen. And then some did listen, and they are doing good. Some didn't want to listen. And I realized too that just like any other industries, there's cycles, just like the economy. So 2010, 2020, the economy was going up, and outside of cannabis, everybody was expecting an economic change by 2020. COVID kind of put some lipstick on this, and then kind of delayed it. But it's got nothing to do with politics, right? It's cycles. It goes up and down, right? 1992, 2001, 2008, right? Every 10 years, you get that up and down. So 2020 was expected. But in my case, I was expecting cannabis to also have a double whammy, because after all those states maturing, the price of retail going down, the cost not going down as fast as the retail, the employees getting paid more, standards are changing, cost of production, cost of building those states, the compliance getting more and more expensive, right? It was obvious that all those maturing states will get kind of that impact on top of the economic impact. And so started to get ready to be there to help them. And so starting in 2019 and 2020, we were talking to bankruptcy lawyers, to accountants, to operators, and telling them there are some signs that you need to look at, and then we can be there to help you. So we're going to talk about a receivership, but in my mind, it was more, let's not go in the court system. We get back to it. There's no bankruptcy here. How about we look at something is not working? We need to fix it now. So the signs, to get back to your questions, the signs are regulation. There's some states that have too many licenses. They have unregulated competition. Erik, wink, wink. And so all those things.
Erik, what did you do?
No, but he and I mean, at least in Maine, right? There's too many licenses. There's
Sure.
competitions that is hard to be regulated. Some states are better than the others, but and so
You hear that,
when
Erik? Some states are better than others.
Yeah, I don't think he's thinking as Massachusetts.
I
and
heard
gold
what I
standards,
heard. I
so-
heard what I heard.
Yeah.
maybe.
Yeah.
But overall, that's one sign, right? When you're in a market where you have too many licenses, you got to be pragmatic. Okay, how are we gonna resolve this, right? The second one is unrealistic or cost of productions, right? And the business doesn't track the cost appropriately. I've been a big proponent of investing in technology to track the cost, but too many operators don't track the cost of goods by the day, right? They do like a reconciliation once a month. Some of them twice a year, once a year. So, just like, it's any other businesses, if you don't know how much it costs to produce this pen, then you can't keep up with the market, and then that leads to a cash crunch, where suddenly, right, cash start to come down, and that's another sign, right? You start having cash issues, payroll issues. You have to cut labor costs, where maybe sometimes it's not the right thing, and so that's another. Those operational issues are the first sign that the business model doesn't work, right? Something is broken. And then it leads to the unrealistic management experience or expectations. And sometimes it comes from the shareholders too, right? There's an unrealistic expectation that because it worked last year, it's going to work next year. And that industry is changing. I mean, every industry is changing fast, but this one is changing by the minute. And so the expectations are unrealistic. And those are signs that there's when the partners are starting to fight, when the stakeholders are starting to not be aligned, then somebody needs to come in and then and resolve the situation, because it's not going to work. And then at the end, it all leads to too much debt, too much not enough cash, too much debt, and then trying to resolve the issues by raising more money. And it's going to get better next week. It's going to get better next year. I'm going to raise a few millions, and I'll be able to reimburse. And the cost of money, if some companies borrowed money at a very high price, and they can keep up with 15, 18, 25% interest and compliances that they can't meet, and then they get upside down. So when you put all those factors together, then people, I think operators and investors and bankers and everybody has to be realistic that one of those signs happen, then you gotta start sooner than later, because the alternative is very costly.
It's so interesting. I assumed it would be a sum of all parts here, and that's what it sounds like. There's not just one thing that sets these businesses up to not be successful or to enter a moment of failure. But you said like the limited the licensing is such an interesting one. When we're talking about Maine, I remember when we were negotiating what the program would look like at the legislature, it was very much a free market approach. We had some semblance of caps that ended up going away. We're going to let the localities limit it. But at the end of the day, yeah, we didn't have, being one of those earlier states, we weren't talking about production management. We weren't talking about those types of safeguards put in the hands of regulators to make sure that we could avoid some of these scenarios. Yes. Certainly, we're having a lot of these conversations now with the states that are launching, like, you're going to need to look out for these things down the road, and we should put these levers in place so we're able to be proactive and make sure not only, again, that we're doing our jobs as regulators to make sure that we're protecting the public's health and safety, which we say quite a bit on this, but also trying to create the most competitive environment as possible, even though we know, again, like everything is stacked against these operators. But it sounds like from what you're saying, there's a little bit of each stakeholder group could do something to help make these businesses a little bit more viable. But at the end of the day, the part that I think I find interesting, and I got a couple questions here, but I'll start with like, you would start talking about when Opus started, it was about helping you run a business, because those that were getting in were very knowledgeable about maybe the industry, the plant itself, how to grow really well, how to make incredible products, but they weren't the people that knew how to run a business. And I find it fascinating. That's how you guys got, and you've evolved with the market itself. So I guess my question is, as you got in and as you evolved, and now you're helping some of these distressed assets. I apologize if I'm getting the verbiage wrong here.
That's good.
And we talked about what some of the signs are. At what point do these operators bring you in to where you can actually help them and turn them around versus, all right, you've already gone way too far and now it's just like trying to cobble together what we can?
In 2025, we handled 6 receiverships nationwide, and only one came out of work that we started prior to the receiverships to avoid the receivership. And that receivership is actually a solution to transfer the company. All the others, they were too late, right? Nobody reached out to say, we have a problem, we got to solve it. Because all those receiverships started as a litigation issue. Partners dispute,
Interesting.
lender not getting paid, out of compliance, investors looking at getting paid. And so out of, 1 out of 6, I think it's probably a good statistics, is right now somebody who says, I have a problem, I don't know how to solve it, can you help me? And the receivership ended up. But in the background, there was probably a couple of others that we helped, and then they ended up not being in distress because, they got back on their way. So not enough, I think, operations right now are lucid or realistic about the situation. And, we're all the same, right? I can do it, right? I know where I'm going. But at the end, I think it's worth, checking when, when you start coughing, you can either just let it go or you call the doctor. It's up to you to decide how sick you are, right?
It's
So
funny you phrase it that way though, because I was thinking like some of these companies, like it's too late. There's nothing we could do for you. There is sort of a medical diagnosis to that in a way that was there a preventative work they could have done or early treatment, early intervention that they could have done. So that your analogy back to medical, I think is, I was thinking along the same lines. It's just, I think it's an interesting, comparison. It leads me to wonder though, are there moments where you do come into a business and when you're doing that diagnosis to say, if you only called me 6 months ago, or what are those early warning signs that an operator or an investor or a shareholder, whoever it might be, or a lender, because I think for our listeners too, and I'm sure many of them understand this, but you sort of tease it, there is no bankruptcy protection for these
No, there's no
businesses. As a
bankruptcy.
result, creditors don't have a lot of levers they can in fact pull. And one of the things as I was listening to Erik sort of set up and establish his question there was, it gets me thinking, like, what is the role of government and someone like the regulator here, where, I think my philosophy for whatever it's worth was always the market is going to grow. It's going to contract. It's going to settle. It's going to do what markets do. Is my responsibility as a regulator to influence that market in any way? Or like what
Yes.
responsibility do I have to these businesses beyond ensuring their compliance? And as Erik alluded to, establishing and preserving public health, safety, welfare. But I don't want to be a manipulator. I don't want to be an intervener myself. These are private businesses entering into private contracts for debt, into private supply agreements, entering into private, employment contracts with their C-suite, with everyone else. So I guess there's a lot of question, maybe discussion worthy elements to this of, um, are there scenarios where you can sort of look at something and say 2 months, 6 months out, we're gonna have a problem here. And then maybe against that is like, what is the role of government in some of these areas? Because as I mentioned, that there is no bankruptcy protection. Receivership is sort of a phenomenon that's aligned or parallel to that, but it's not true bankruptcy protection. And I think that also speaks to, you mentioned the cost of money in cannabis is wildly expensive. That's one of the reasons why, frankly, is that it's pretty heightened risk in some of these areas. So there's really a handful
We
of
see.
questions in there, but trying to maybe just
Yeah,
establish
you got a bunch of
a
questions in
discussion
there.
here. Yeah,
But
sorry about that. I do that often.
go, going back to the doctor analogy, because that I use actually a couple of times with some regulators. At the end, there's symptoms, right, that happen. One of them is really about the process of managing the business. Too many businesses in the cannabis industry don't have any reporting, don't have any management dashboard. And I think the one that we see that are succeeding, they are treating the business just like any other industry, just like any business 101. How much inventory, what's my cost, right? But most of the time when we get called early, first thing is, where's your cash flow forecast? Where's your budget? What's your dashboard? What's your month, last month financials? don't have it. Even one of the receivership we started 4 or 5 years ago, the judge asked for financials. They couldn't produce the financials, and they asked them to come back next month with the financials. So that's one side, right? If the business is not tracking, is not looking at all those things, then something's off. But then, so that's where we can come in early, is let's put this in place. Let's do the assessments. Let's look at what's wrong. And so every business is different, right? Sometimes it's the people, sometimes it's the culture. I mean, you come in, sometimes you see that people are tight, but there's no management. Sometimes you see that people are just not working together, but the management is trying. I mean, each time I look at a new business or a startup, I think you need a market. We have a market. It's what, 27, 30 billion. We have a market. The money is, and you need money. I think the money is out there. Maybe it's expensive, but I think, people think there's no money for cannabis. If you have a good project, you can find it. Then you need to have a product, right, for your business. I think we all have a product. Depends what it is, flower or vapes or whatever. The product is, and then you need management. And I think some of those things are, if you're missing one of those, then you're not going to succeed. I think the management and is what usually is missing is, look at your reports. What's your business model? How do I keep people accountable for things? How do I create a culture and things like this? And so that's also where the government part can bring something. We're all about free market. That's okay. Let's, capitalism, let's do it. On the other side, we got to think that customers are looking for a product, medical or adult use, customers are looking for a product, employees are looking for a steady paycheck, right? Investors are looking to not lose money. They're all looking to make money, but at least they don't want to lose money. And the government is trying to get a successful program. Well, by saying, hey, we're in a town of 60,000 people and we're going to have 30 stores, and you think you're going to have anyone that's successful? No, it's not going to work. You can't. And I'm not even talking about the towns around it. It's not going to work. So a state that says, yeah, everybody can get a license. Sure, it's good. And it's good for people to come out and get an opportunity. But on the other side, you're probably setting those people to fail. Employees going to lose their job. Customers are not going to get their product, and then they're probably going to go back to the black market if they really want to. Investors going to lose money, so the money is not going to be available. It's not helping in general. I think it's not helping in general. And then on top of that, you have I'm a proponent for people to get a chance, but some of the social equity programs that were created were not created to make the social equity owners successful. We set them up for failures. And I mean, we registered for a couple of programs to provide free advice, right? I mean, we're not cheap, but I said, yeah, I'll help you. Nobody ever reached out to us. And I would have been the first one to say to some people, you're not going to succeed. And we ended up working with some companies who were failing, but they had no chance at the beginning. And I think that's where the government has a role here to, of course, protect the customers or the consumers and the product and the safety and things like this, but also to make sure that the employees get paid, the government get their taxes, that, otherwise we're just setting ourselves up for failure.
So take it a little step further with that, because obviously that's the lane that Shawn and I live in, and I want to delve into a little bit more here too. But based off of our conversation, it sounds like, again, it's the sum of all parts. All of these things factor into the equation of why these businesses end up where they end up. But a lot of it sounds like if they were a little bit more proactive and hired Opus to help them launch their business, they might not get to the point. I mean, you're giving me anxiety saying, oh, we have this business owner who's going downhill and they can't tell you X, Y, or Z. They don't have data. I'm like, Shawn and I both, we love talking about data and how we set up systems to make sure we're successful in certain regards. Of course, all three of us run our own businesses. I have spreadsheets on top of spreadsheets on top of spreadsheets and accountants and teams and all that stuff. So the fact that we can get that far and not have some of those business basics just gives me big anxiety. But I'm surprised too, because I thought on this conversation that it would be like, oh, the tax burden would be the primary driver. Like there's just too much money coming out, or the states are over-regulating. The cost of regulations is just crippling to these businesses. And they may to some degree. Yeah, absolutely. But
I mean, definitely 280E is a problem. That's
yeah. But I'm interested from the state side, the state regulator side, the agencies. And we've heard about, all right, if we dole out too many licenses, that sets some groups up for failures and the bad downstream effects of that. That's one thing that states could do, legislatures or agencies, that advocate for limited licensing and then kind of navigating how you're picking winners and losers. But aside from that, what you're seeing in these other states as far as what agencies or even state legislatures could have control of that would make life, I don't want to say easier. I think easier is the wrong word, but maybe fairer, would be
Yes.
running more of a responsible program without giving up the controls over ensuring the public health and safety and welfare, and just basically running a transparent and responsible cannabis program. Like where do you see mainly those being a contributing factor to the
Yeah.
work that you're doing?
Yeah. So, I don't want to get into the conversation of the role of government, too much, not enough, right? That's another conversation. But from a business standpoint, right? It's a regulated industry. This is not the first regulated industry. There's a lot of regulated industry. This is not the first industry who's got too much taxes. There's a lot of industry who's got too much taxes. It's not the first industry who has cost. I don't know how to turn this, but like issue with cost, right? Like supermarkets make money on pennies, right? Gas stations, even if the price of gas is going up, it's not going in the pocket of the guy at the gas station, right? We all know this. So I know 280E. I presented on 280E too many times, all on the same page. Let's get rid of it. But it exists, and you can make money knowing all those parameters, knowing how many licenses you have around you, how many people you need, knowing the compliance, even 280E. So sure, your margin might not be as high. Goes back to how much the cost is, right? If you track your costs, if you know that you're borrowing money too much, then you're going to be upside down. And sure, as an owner, might make less money, but those are business choices that you can make if you're rigorous about what your business model is, what your numbers are. And when we do business models, they're wrong the minute we send them, because I don't have a crystal ball. All I can do is that's what I think is going to happen, and you make your own decision. But at the end, if you don't go through that path, then you can really optimize your profit. You cannot optimize your future. So going back to your question, I think on the number of license and how that can be regulated, it's a tough one, because on one side you have constituents from a state that says, I want no licenses, or I want 1 million licenses. And in the middle, you have the regulator and the legislature that are squeezed by their constituents asking, I don't want it, or I want too much. That's a tough one.
Yeah.
Personally, I think the government, government, legislator, a regulator, you call them whatever, but the people issuing the licenses should keep in mind that it's just not only for the customers, but also for the people who are trying to be successful, or just, and it can be a small business. It can be just a store down the street, or a bigger company who's in multi-states. They're all trying to get to a point that is part of their business model, and they're trying to pay people. And so I think the regulators probably should focus more on, are you providing good pays to your employees? Do you have 401ks, right? Trying to help that direction, because otherwise you're just creating fake businesses, fake opportunities that are just going to fail 2, 3, 4 years down the road. I mean, there's somebody who called me, was in Massachusetts, Shawn, who had a license, and I think they raised $10 million for a grow, and they were losing $200,000 a year, and they couldn't understand why. And they were wondering if somebody could buy the business from them. And when I said, can you send me financials? He had no financials. And when I said, who's going to buy a business that is losing $200,000 a year, and how do you expect $10 million out of this? I mean, you don't need to have a PhD in finance to see that it couldn't go through. And I'm thinking that person should have never had a license. because it was a failure to happen. And so who's guilty? That person, probably the
Careful,
investors.
careful.
No, yes. You, Shawn,
It was
for
after
sure,
my
not you.
tenure.
All the
Yeah, it
listeners
was.
know exactly who's
But you
guilty
see what
there.
I'm saying, right?
What year did that happen?
Nobody's guilty, but somehow, right? Maybe it's something missing in the free market, because at the end, create fake expectations, and it's
Well, there's a segue there, and I think it's an interesting one. Of you mentioned 280E. We've talked about the cost of capital, the lack of traditional banking, the complexity, but also the cost of compliance. And what I observe in that is all of those things were known in advance.
yes,
I entered this market aware, or at least I should have been aware, that 280E
yeah,
was a factor.
yeah,
I entered this market knowing that it was a lottery license system or an open license system. I entered this market knowing that there was not traditional capital, and that I would have to, if I had to raise money, it was going to be expensive to raise. I entered this market knowing that supply and demand was going to be, especially at the earliest days, an observation curve of some sort. So knowing that, I think the other thing that human nature is that it's never my fault,
of
right?
course,
It's never my responsibility. So therefore, I've got to look around and be able to point my blame. But I think about some of these businesses, and I think all things being equal, at some point, businesses succeed or fail.
yeah, yeah,
And sometimes it's because the product wasn't good enough, or the sales experience was not good enough, or the location was not good enough. And all of those things are factors whether any business succeeds or fails. And so are you seeing, I guess one of the things I've observed in the market growing is, let's use Massachusetts and Maine as examples, because when 2016 came, Maine and Massachusetts were the two states in the Northeast to have
yeah,
legalized.
yeah,
And so there was always going to be a window in a period where the competition was limited and the going was good.
yeah.
But then Rhode Island, then New York, then Vermont, right? And then Maine comes online, Massachusetts goes green. Like, all of these things happen. So the environment literally changed under my feet. But I would argue, and this is an argument I guess I can make and someone can disagree with me, is that was always going to happen
Yes,
eventually.
yes,
And so if I opened a retail store on the border of New York and Massachusetts, I was kind of hedging a bet that it wasn't going to happen fast
yes,
necessarily, but it was going to happen at some point.
yeah,
And then competition takes over. And I think, to your point of there's 60,000 residents in 300 stores, I look at that and go, someone's going to win that race.
yes,
More people are going to lose that race than win
yeah,
that race, of course.
yeah.
But how do I win that? How do I position my brand? How do I position and so I again, there's really no question outside of an observation here of uh, do you agree with that sentiment that, look, all these things were known going into this?
Absolutely. When NETA opened, I think it was NETA opened in Massachusetts, and they had to track, people in buses, right, to get to their store, and everybody was like, they're the king of the hill here. It's like, that's not gonna last. When you're the first one to open in town, of course you're gonna have
That's
a
right.
line out there. When you have 2,500 others stores, you're probably gonna have to divide your sales with the others. So absolutely, there's things that we can control. 280E. Nobody likes it, but you can control it. You know what the impact is, right? Staff, you know what the impact is. Cost of material, maybe you have to put some assumptions, but packaging is not going to be, it's not going to go from 10 cents to $1. I mean, unless there's other political things, but those are the things you try to predict, right? And then you have the market. None of us know what the future is, but there are businesses in cannabis that are making money. I mean, you probably know some of them. Some are very successful. Those are the ones that are buying companies out of receivership. They have access to cash. They run their business super tight. It's not about weed. It's about selling cannabis. It's not about a store. It's about an experience, right? So they figured this out, and they're very successful. And most of them, they have very capable people. I mean, I should say all of them, because I don't want anybody to say, what are you talking about? But, they have very capable people in place that are running numbers, and they are very tight. They're now using data analysis and AI. They have their finger on the pulse on every market. Do they like the changes? Of course not, right? Like, when Michigan puts a 24% tax, of course you're not going to like it, right?
Exactly.
When things like this happen, but you just like our lives, right? You woke up this morning, you don't know what's going to happen by the time you get to dinner. So, but you react, but you have a plan. If you don't have a plan, if you don't look at what's happening, then yes, you're facing a wall.
So, Shawn, if it's all right with you, I want to transition the conversation a
course.
little bit
Yeah.
because I think it would be important for our listeners and certainly me as well to understand like the gears in the cog here, like a receivership. What exactly is it? What does it look like? We touched upon the first question is like, who is actually calling you? Who's
Yes.
calling Opus? Is it the investor? Is it the CEO? Is it the general manager?
Yeah.
And then when that starts, what is it? What's the first thing that you guys typically
That's
do?
a very good question. I think that's the one we need to spend time on. So first, like we said before, bankruptcy is not available for cannabis companies because bankruptcy laws are federal laws. And, bankruptcy laws, Chapter 11, Chapter 7, depending on, right, they're there to, it's federal laws and they protect, they give some protections. That is not available to us. So now you go down to other options, which is receiverships, governed by state laws, right? So you're going to the state court. Not every state has the same law. Some states don't have receiverships. For sure, most of the regulations do not have receivership in their cannabis regulations, and I think some of them are now catching up. And so, just like bankruptcy, this is a litigation, right? It starts with some financial litigation. Somebody is looking for something. We need to resolve it. And so it's partners not being happy with each other. It's a lender looking for money and cannot get any answers. So at the end, through that litigation, how do you resolve it? So either the three of us talk, okay, find a solution, and that's outside of the court, and then we maybe there's some legal documents, but we all work together, and then you get like some kind of forbearance agreement or some management agreement. But if the thing cannot get resolved, then you need to get an adult to come in the middle of the litigation and say, okay, how about we help you? So that's what the court is doing, right? The judge is through the court is saying, okay, I understand the litigation. We're going to put somebody in place to resolve and help us resolve the situation, and then come back to me on a regular basis with your progress, and then we'll make the decision on behalf of the company. So who calls us? So it usually starts with a litigation. That means lawyers are involved usually first, right? So let's use the lender part. It's probably easier to use as an example. A lender is owed millions, and they can get through a plan to get paid. They feel a risk, right? The sales are going down. There's no money or something like this. They're going to ask for a resolution, and they're going to say, we want to put a receiver there because that person, so the receiver is not reporting to the lender. The receiver is not reporting to the owners. The receiver is impartial, reports just to the court, right? So we're going to the court and say, we want somebody in there to tell us what's going on, to tell us how we're going to resolve it, to take control of the assets, to preserve the assets. And so then we all work together. At least that's the way I look at it. Then we're all going to work together to find a solution and to get to a resolution.
Can I ask a question there, Jacques? And I think the answer might be a combination of things, but is that the last resort, or is that a proactive strategy on behalf of the lender? So for instance, if I'm going to court, is there an advantage to going earlier as opposed to later? And alternatively, what steps might I have taken before going to the receivership to try to secure that debt or recoup that debt? I guess from like a sequence standpoint, just curious what you've seen.
Yes. So lenders or creditors in general all have a security level, right? So the lenders have different securities in the company, right? So they have a lien on everything. They have a lien on just one thing, and then you have the common vendor that has no lien, right? So you have a kind of a ladder of creditors. Usually top creditors is the person or the entity who's going to say, I need help here. Um, uh, Going sooner than later, I'm not sure that's really. I mean, to me, it should be resolved outside of receivership because receiverships
Right.
are expensive. I mean, lawyers are expensive. The process is long, right? Courts are full of stuff. So the judge is not going to hear us tomorrow morning because we want to. So it's going to take time. Time is money. People are money. So it's gonna cost. So if it can be resolved outside of the court, maybe with our help, maybe with lawyers, right? But at least you control your own timeline and you
Right.
control the outcome, then it's better. But I think the receivership come to a point that either it's the strategy to protect the assets, or it's either a strategy to get to resolution because the parties just can't make it work.
And
And
the takeaway there is I may not need, therefore, a court or an appointed receiver to undertake the receivership process of looking under the hood, tidying. Like the court process is, once it becomes very formal, as you indicated, it then goes on the timeline of the courts and at the pace of the courts and at the whim of the courts.
yeah,
Whereas that voluntary agreement and relationship gives a lot more flexibility to every party.
absolutely. I mean, no matter what, the process is going to be the same because when we start the
That's
receivership,
exactly right.
we have to come in and assess the situation. I don't know anything about the company outside of what I read or what somebody sent me. So when we start the receivership, we take control of all the assets, right? So we become, for lack of a better term, we become the CEO of the company. Bank accounts, staff, insurance, production. We take control of everything. But we really have to assess the situation, right? So the first few weeks are about how much cash do we have, what do we have, where are the assets, what's the domain, what's the brand, where are the people, who's paying what things like this. That can be done outside of receivership as an assessment just the same to come up with what's the cash flow and what are the options. Because if people are willing to resolve the situation outside of the court, then it's much cheaper, it's much faster, right? We can spend a week, 2 weeks, whatever the time is, but let's say, okay, this is what we see, those are the options. And I mean, at the end, most of the time the receivership ends in selling the assets. Because if it's a lender, they don't want to take it over, right? They can credit
Right.
bid, but most of the time they don't really want to. So you end up selling the assets, the license, the brand, the locations, whatever it is. But if it's something you can do outside of the court, much cheaper, right? You get faster, more flexible.
And what?
Kid,
Go ahead, Eric. Sorry.
no, I was going to ask, I mean, because it's an interesting distinction here, but I would have to guess, and you can tell me if I'm wrong here, Jacques. The vast majority of the receiverships are court ordered.
Yes.
Because I can
There is no receivership outside of the court. I mean, there's no receivership.
Yeah, okay.
Receivership equal court. Restructuring, no court.
No court. There we go. I would have to imagine that more of these end in receiverships than restructuring, because I would find it hard to believe if you have your again your creditor there says we have an issue, I want to do X, Y, and Z, that you get all the other groups that are willing to do that, because I mean you have egos that are involved. So I just wanted to make sure that my assumption was correct there. But I think it makes sense to any rational minded person that operating outside the courts and trying to come to an agreement is going to be much smoother, less expensive.
Yes.
But okay, go for it. That was my question, Shawn. I want to make sure I was thinking about
you've
it
got
right.
some, like, the ego piece is definitely like some founder syndrome too, of like, I got us into this, I can get us out of this. Like, everybody buckle up, hold on to your butts, we're off and
Yes.
running. The question I have too, though, is, and I saw this a little bit in my regulatory days, when obviously one of the things that sometimes doesn't get paid too is taxes. And so we're looking at we can't renew your license unless you get a certificate of good standing from our Department of Revenue, and we're under notice that you cannot get that precious document. And then there would be, well, we should, do we padlock the business and take over? I'm thinking, what are you going to take over? A sales counter, a display case? So my question to you is, when you say we're selling the assets, are there a lot of assets in some of these businesses, as far as, I mean, because I'm thinking IP is certainly helpful from a branding standpoint, but otherwise it's typically rented real estate. There might be some equipment and things, but when you say selling the assets, I guess for the scope of our audience, what is an asset of a cannabis business? What is a typical asset that can be sold off?
Yes, that's a good question. So there are assets for sale. So first, cash flow is an asset. People are an asset. Brand is an asset. Building, equipment, right? Inventory, all those things are assets, right? In general, some have more value than the others. So for a cannabis business that leased the space, right, at a high rent, uh, doesn't own their own racks or display cases, um, and is licensing the brand, yes, the only assets you have left is people and cash. It's a little bit more difficult, right? Because you're really selling a license, and then if you're in a state where you can get a license within 3 weeks just because you're alive and you can sign a paper, then you don't really have that much to sell, right? Except the cash flow has got value, but it's limited. On the opposite, and we involved in a receivership like this where they own their building, 3 or 4 campuses, they own the brand. They have multiple licenses, right? They have systems in place, good reporting, right? So then at that point, you're really selling not only the cash flow and the license, but you're also selling the know-how of the people. You're selling the brand, and then you're selling the buildings. So then at that point, yes, you do have a lot of assets, and you have a business that somebody can come in and then fix whatever needed to be fixed, but you have a bunch of employees that are committed to the business that can make it happen. So those are the two distinctions. But also you got to realize that we're talking about distressed assets. So there's distressed in that word. So this is the opportunity. Unfortunately, the value is, in 2026 is not the value of 2019 for that same business, because distress means you don't have the leverage, right? So if the business was, I'm making it up here, it was valued at 10 million on the same cash flow 5 years ago, it's definitely not going to be the same value for the same, for the same business, because somebody's going to say, well, you need to sell it. It's going to have to be cheaper. But that's our job, right? Our job is to maintain the business, trying to grow the business if we can, but maintain it, keep the people. I always think that with the cannabis industry, we have enough issues to deal with, that I'm trying to make sure that employees are taken care of. The industry sees the receivership as a success, not as a bad thing. So the businesses can keep moving forward, maybe in a different shape, but the employees have a job, the license continue, the brand continues, and that's a success. And and in the meantime, we're trying to keep the business up and running.
I'm curious, but you mentioned like the distressed aspect of that. Um, it strikes me, and I'm wondering from your experience, how are you typically received, you and your team, when you go into a business? I'm thinking about the morale of the employees,
Yeah.
the anxiety they must be feeling,
Yeah.
and then how do you handle sort of the psychology of that sometimes? And I'm sure it's delicate, but I just, from your own experience, how has that been, and maybe if you can shed any insight into just how that
Yes.
experience
Yeah.
goes.
It, outside of, any industry, distressed is, now I'm going, stress, boom. So people are, when it's public, employees are stressed, management is stressed. A lot of management don't understand the process. Definitely the staff doesn't really understand what's going on. And so we make sure that when we come in, we leave the ego outside. We're just here to help. We have no fight no dog in this fight. We're here to make sure that things progress. And a few people mentioned that our approach to receivership is different than other people. We actually go on site. I talk to employees. I do town hall meetings to explain to them where we are, what we're doing. And to me, communication is important. So the first week is always, you can feel the stress, right? You can feel the emotion, and we're trying to calm down. But I also have to tell people, I'm sorry, I'm in charge now. So whatever you were doing before, we can do it the same way, and this is how, this is what we have to play with, and no, you're not going to sign the checks, and no, you cannot buy this, and things like this. But trying to educate them in the process. So it's the first week is very important, and trying to calm everybody down and tell them, this is going to be okay. We also know that people stress out and they leave their job, and then once we get to a transition, people start to freak out and they want to leave the company, and we're trying to keep everybody around, because remember, people are assets. So we're trying to say, okay, we're here to find a job to keep your job here. So not everybody's going to keep a job. Let's be clear, unfortunately. But if we can keep most of the jobs there, and the people who have a lot of talent, and educate them about the process, then everybody moves on. It's interesting that you guys have your own companies just like me, so we control our own jobs more or less. But most employees think that because they have a job, they're safe. And when the receivership starts, they feel like their job is in jeopardy. Well, nothing has changed. It was not as safe yesterday, and it's not as safe today. It's probably more safe with the receivership than it was yesterday, because yesterday the company was about to close down. Now we're working on the future. And I'm trying to tell people, it's a perceived, for the employees, the perceived stress, but at the end, if we all work together, creditors and company and employees and regulators, there's probably a path somewhere where most people are gonna be okay.
So there's a nice segue there, all of us working together and naturally bringing it back to the state side, the regulator side. What, for those that are in that space and that listen, if they listen, what should they know about receiverships or restructuring, the work that you're doing? And the layer that I want to peel back here a little bit too is, like, when I came in, and Shawn, I would imagine yours was likely the same. Like, we never had this conversation for 3.5 years. I just found out or learned what a receivership was probably in my last 6 months working for the state. And it's obviously become more and more of a conversation with the work that I'm doing with states. But you had mentioned some states within their cannabis frameworks, they don't have anything about receiverships. Some do. What can state regulators do, if anything at all, to help make your life easier, the life of those people that are being impacted easier? Should they have something in their regulations, in their cannabis laws? And what are those things?
Yeah, I think they should. So we've done the first 2 receiverships in Maine, but the first one we did was in Massachusetts. And I think now we've got 4 in Massachusetts. We've done in Nevada, Michigan, Illinois. Starting in Maryland. I think we were the first company to be approved in Maryland. And I talked to your colleagues in Maryland, and they were asking us questions. What are we talking about here? I mean, that's not exactly what happened, but you could tell. And then when I realized that they were looking for information, I tried to educate them about the process and what we're trying to do, a little bit of what we're doing now here. I think the regulators should realize that cannabis or not cannabis, this is business. It goes up and down. And there's going to be companies who are going to be super successful, and some are not going to make it for a lot of reasons. We got to think about how we're going to take care of the one that are failing because of the regulated part of it, right? The license, the products, the on the medical side, how you take care of the patients. On the adult use side, how you take care of the product going in the street because they're trying to make some. So I think every regulators should look at their rules, and then probably reach out to professionals like us, maybe actually, create like a symposium of sorts where ideas are exchanged, experience are exchanged, and we can share what we see from a business standpoint, so they can reconcile with the operation. Because how do you wind down a business, right? Like what if it closed tomorrow and everybody's like, I'm out of here, right? Well, it's nice to say, no, you have to clean it up, you have to take care of the cannabis. Well, if people fly away, how do you deal with this, right? And that's, it's going to happen. Right.
Well, there were scenarios, I'm thinking out loud here a little bit, or recollecting, and I'm back to one of the earlier comments I made around, like, what is the role of government and some of this, and that is very philosophical and a bit political. And I think the apolitical aspect of that is that absent any protections, absent any safeguards, it becomes the government's problem,
Yes.
right? Like you said, if someone just abandons their license, that's a regulator's problem.
Yeah.
And the expectation is going to be that from whether it be law enforcement, public health, society, the local government, is that someone's going to do something about that. And typically that's going to be the regulator. So getting ahead of that, I think there's incentive to at least be able to say to those stakeholders, those constituencies, there is a plan in place. If and when that should happen, there is a plan in place. We ended up requiring licensees to post bond and thinking, well, in the event that we've got to go in and take down that business, what's it going to cost us? It's going to cost us a lot more than the bond, that's for sure. The ability to access that bond. We even toyed with, I remember back in my day as a regulator, would the state have an interest in going in and petitioning for a receiver in some instances and
Yeah.
saying this business has been abandoned for all intents and purposes? We as government have no inclination to run it, but we do need to understand what's there,
Yes.
what's left for assets, what has in fact been abandoned, be it tangible property, intellectual property, whatever it is. And I think, again, doing
And not
nothing is
everybody
not
can be
really
and not everybody can be a receiver either. You know,
exactly.
I mean, in the past we've been doing receiverships outside of cannabis for years, but in cannabis for 5-6 years now. And a few people reached out to us. I want to be receiver. I want to be receiver. I'm an operator. I want to be receiver. it, it's more than this. You have a process. You have to understand, how the regulation works, how you deal with the law, how do you deal with the employees. So it's not because somebody was an operator or feels like they can be a receiver that's going to happen. So I think the state, absolutely, if they end up having to deal with a situation like this, they should have a few people that are vetted, that can help and get paid, either by the operator or by a fund to clean up whatever's left. And it may not be a receiver, it may just be kind of a process, because through the receivership, usually, people need to get paid. So the receivership starts when, you understand how the professional is going to get paid. Something we haven't talked about, but when the receivership starts, prior debt vendors don't get paid unless you have to, like electricity. If you don't pay them, usually they shut you down. But, the receiver usually has to pay all the debt that it creates, right? So you have to make sure that there's enough cash to pay the professionals, the staff, and things like this. So those are almost like a controlled environment. But as a regulator, you could end up having a situation where people are like, keys is yours, good luck.
Yeah. And I think for some operators, that's the cleanest exit is goodbye. And also in this environment where, let's say I came to Massachusetts, for instance, to run a business because it was a legal market. I have no roots here. I could see you later. It's not a big deal. So there's going to be scenarios where I think, back to Erik's question or to his point of, I think regulators do have a vested interest in seeing that there's at least a pathway for some of these assets to be
Absolutely.
overseen safely, operated safely, or at least just frankly assessed in a way that is secured and with the interest of moving forward. I started at the outset, and I realize we're not surprisingly we've used a lot of our time, and I'm grateful for that. I mentioned at the outset there's sort of a season that I've observed, which is the legalization, this growth, and now we're in this phase where receivership is becoming a bit of a buzzword. Do you think are we at the beginning of that moment? Are we in the middle of that moment? And I think there's going to be some factors we haven't talked much about, but would have this implications or would have an impact on where we find ourselves, which is we've talked a lot about, um, we haven't talked much about, but this, we're hearing a lot about rescheduling. We're hearing, obviously, hemp is a factor that's putting competitive pressure on some of these businesses.
Mhm.
Knowing that we don't have that crystal ball, like you mentioned, but we do have some insight into where we might be headed, things like rescheduling or whatever happens with hemp. Where do you think we find ourselves? Is this the beginning of a moment? Is this a trend that's going to continue? And what things might influence that in the
Yeah.
next 6 months to a year that
Yeah.
could either upend that prediction or frankly,
So,
the
well,
opposite?
yeah, it's of course it's hard to say, but I think unfortunately the distressed part of the industry is just at the beginning, because it was expected. It has to happen, and unfortunately, and I'm hoping that businesses that are feeling some heat are just going to be realistic and change course, right? And but unfortunately, there's going to be more of those that are, a lot of debt is due. Landlords are looking for money. Vendors are not getting paid. It's going to have a ripple effect, right? And so, fortunately, I think we have more coming, and then markets are getting mature, right? So Massachusetts or Michigan have more receivership these days because they started years ago and they were big markets, and then there's a lot of price compressions and market changes. New York is next, New Jersey is next, because it's going to happen inevitably. I think also outside of legalization, I'm hoping that the industry is changing towards more of product experience and less about historical products. I don't believe in the 60 strains in the store. I don't believe in the 200 vapes in the store.
Right.
None of us are buying products like this in our life. You don't go to the supermarket when you have. I mean, it's probably the one that I will use is the cereal alley where you have all those brands, and at the end you're like, I don't know, I'll take that one, because there's too many and you don't know which one is what, right? But usually, you need a smaller offering, and I'm hoping it's going to go that way, because with the price compression, if the costs of production's got to come down, then something's got to change, and so that's so unfortunately, I think we just at the beginning, and there's a few more years. It might not be only receivership. I'm hoping that restructuring part that's going to happen, and companies who are going to realize, I need to talk to my lender. I can't, and this, I need to talk to them, try to find a forbearance agreement. I need to talk to my vendor. I need to find a way. I need to change my business model. I think that's what's going to happen. And then as far as rescheduling, I mean, so I started in 2010, and I think I'm 4 presidential cycles later, and I hear the same thing. It's happening. And so, yeah, sure, we made maybe a little more, a bit more progress. I'm not sure we actually want it. I mean, from a political standpoint, yeah, no problem. Let's be legal. But from an industry standpoint, I'm not sure we're ready. First, I'm not sure Schedule 3 outside of 280E. I think Schedule 3 is going to create more problem than that we already have, right? So may help on one side, probably going to create a lot more problem. And two, if the industry in itself has a lot of players that are a little bit fragile, I'm not sure we're ready to have more people coming in, because it's not going to help. And I've said that several times. We might not want, we might not wish what we want here. It might not help. And for a small producer, going full legalization, yeah, on one side sounds cool. On the business side, that means all your brothers and sisters are going to come in and do the same thing. Good luck.
Yeah, and that debt, if I can get access to capital, that's one thing, but some of those folks that would offer it are going to have a lot shorter of a leash and a lot less tolerance.
Yes.
And I think would pull that lever much faster or much more aggressively, and to the detriment of that business. Because, if I'm thinking about, if I'm going to lend you your money to start your small business, essentially that's what this is.
Yes.
And you don't pay, you're not going to get a lot of tolerance from me for, I've called you
Yes.
twice, you didn't pick up. Well, I'll see you in
Yeah.
court. We'll see what happens. And
Yeah.
so it could get a lot more hostile in that instance, unfortunately. And again, that's all just a prediction based on the past. But
Something that I observed in the past 4 or 5 years that changed is the industry is not coherent as an industry. A lot of people are talking, but we are not going in the same direction. It's still very kind of my lane. I'm cool, but it's my lane. But if you look at other industries, when they go to a conference, they are trying to make business happen, but they're trying to go forward all together and try regulations and products, and we're not there yet. I mean, there's it's the industry is not uniformed, and I think that's going against us.
why do you think that is? Do you think it's still a competitive market? Do you think it's a stubborn kind of, this is my lane? Like, I guess, do you think the industry doesn't see itself as a cohesive industry too? Of, I'm a retailer, I'm a manufacturer, I'm a grower,
It all
or is it?
started. it all started with activists, and we should be grateful for the work they've done,
Of course.
20, 15 years ago. And they created an industry. Then, in my opinion, it turned into an opportunistic business, and people are looking at it as a way to make a lot of money. And I think that's starting to fade. And I think the next phase is, how about all of the players are looking at it as, we have one industry that if we all work well in the same sandbox, then it's going to work well. And then we can share technology, we can share ways, practices. Every business are always going to be different. Every market is always going to be different. But you can have a Starbucks and Dunkin' Donuts and a local coffee shop, and they can be successful. But they have to all work and serve the same way and have a similar ways of working. And that's not where we are. Products are so different. The way the regulations are different. The products are different. The way we handle labor is different. And I think it's not going towards having a unified industry that can then make progress. So from a political standpoint, yeah, let's talk about 280E. But as an industry, I don't see the unity.
It just sounds like time, like the natural maturation of an
Yes.
industry. Once you get through all of the noise and some semblance of stable footing, then you can start to have those conversations as far as next steps. And then I want to leave it with, or I'm Shawn, I'm sorry if I'm kind of cutting it off here, but I want to make sure that we ask an uplifting question here.
Yes.
As far as like, what are you optimistic about in the cannabis space? And it could be this year, it could be in 10 years, but there has to be something there.
Yeah, no, I'm very optimistic about the industry. I think the industry is going to continue. A lot of people saying, "Oh, you work with those distressed companies. Do you think the industry is dead?" No. I mean, the 30 billion is still there. The consumers are still looking for it. So this is good. It's up to us to organize ourselves. I'm very optimistic that what's happening now is actually going to open the eyes of all the leaders. I know a lot of leaders are very aware of what's happening, and everybody's working hard. I'm hoping that it's going to unify people, and it's going to continue to show that the opportunity is there. It's for all of us to grab it and make it better and continue to expand. We probably, I'm very optimistic for the future. Beside the fact that we're going to work on some distressed company, because that's part of
just part of it.
Yeah. I mean, yeah, it's just we're teenagers and we just got sick. So let's fix it and let's continue our growth, and it's going to work out okay. And with your podcast, I think you're showing all the things that can happen. I mean, seriously, yeah, I know. I
Like
fell
and
asleep
subscribe.
in the plane though on your podcast. I've got to.
It's one of
Yeah,
Shawn's
that's-
rambling moments,
Yeah.
probably.
I'm off my soapbox. Sorry about that. Yeah, I think
the industry is there. I mean, Deidre Gorman, on what she was talking about, transport and things like this. This is uplifting. I mean, think about it. 15 years ago, we had to go to the bank with an envelope, and we had to make sure it doesn't smell too much because it was a problem. Now you have one of a truck that comes, and then they even have smart safes, right? I mean, we couldn't find payroll. Now you got, tons of, we work with a few payroll companies, CPAs, we got lawyers. It's there. So I'm very optimistic. It's just a blip, just have to realize that we got to fix it.
And I think too often we zoom in on the moment. We don't zoom out in the sort of the
Yes.
overall crescendo of an industry that is
Yes.
still very much in its infancy and as it matures. One of the things I think that your team and you are doing though is preparing this industry for that next phase, whether it be through restructuring, whether it be at the front end. And I appreciate you mentioning that you volunteered and you and your team volunteered to do that work with new applicants about business planning and that sort of work, because one of the things that, as I've talked to businesses that are thinking about that next phase, and what does my exit look like, is do you have your books in order such that when someone comes in to assess your business and actually assess it against what you expect for it, can you prove that? And do you have it in a report that can be produced and reproduced in a way that shows your growth over time? And I think that is a necessary aspect of any business, and where the cannabis industry is maturing is in professionalizing those operations, where
Yes.
by all means sprinkle your cannabis onto your business operations, but when you break it down to the studs of that structure, it needs
Yeah.
to be a business. It needs
Yes.
to function
Yeah.
like a business with some predictability.
Yeah.
And I think the sprinkle, that's sort of that's the IP that someone wants to buy. That's the
Yeah.
brand. That's the
Yes.
product line. At the end of
Yes.
the day though, what does it cost to make your product and how much do you sell it for?
Yes. And they
And I
want
think
people.
what you're doing
They want
is a value add overall.
Yeah. And they want people. You got to train your people, pay them correctly, offer benefits because that's an asset, and you got to have the
That's right.
right level and things like this. And when the business is getting sold, the employees have most of the time stay because nobody buys a business with an army of people in a warehouse waiting to come. Right? You use the assets that you have on site. Yes, invest in the business, invest in technology, training, good practices. Um, yeah.
And I think, like I said, that's true for any business, and I think cannabis has its unique legality elements to it. But those are things that can also be navigated with some skill, with some perspective. And again, I think you're
What
also
is it that
scaling
we
it
haven't
across state
resolved?
lines.
John, what is it that we haven't resolved? I mean, I talked to a cannabis company last week that says we cannot get payrolls and our employees have a problem. We have to pay them
Sure you
cash.
can.
That's not true.
That's right. Sure you
That's
can.
been resolved 10 years ago, right?
Yep.
We have insurance, we have banking, we have lending. Okay, cost maybe. We have payroll. We resolved all the issues we had 10, 15 years ago. Right. And I mean, Eric, you probably remember, we couldn't find a place to do gummies 13 years ago. We had to rent other places. We couldn't find equipments. Nobody wanted to sell equipment, cash and things. All those things more or less have been resolved. So there is no excuse to not look at the business just like any other businesses. Look at your numbers, treat people correctly, expand your brand, expand your experience, your R&D in products. I mean, that's what a normal business does. And the 280E, okay, I know it's a pain. I deal with it, but it's a known factor. Let's work on the things we can't really control.
And but the thing is that those factors that are unique to cannabis are unique to all cannabis operators as well.
Yeah, yeah,
280E is universally applicable to a cannabis operator. So in a competitive landscape, all things are in fact equal.
yes,
Right.
yeah,
So, and I think if 280E goes away, congratulations. That's great. Your margins got easier to manage,
yeah.
but it also gets easier for everybody else to manage. So you're still in a competitive chase and race. And I think some business operators, that's what they live for, is that competitive nature. And I'll put my product up against yours. And I think that's a good thing for the market too, because the consumer wins in that. And that's why I also tell people often when they say, well, the price is created, it's like, depending on your perspective, that could be a good thing. Patients are accessing the cheapest medicine they've ever been able to access. That's great. If you borrowed against prices from 5 years ago, like you said, that price is now coming due,
Yeah.
and you might get to meet Jacques and his team before
Yeah.
too long.
We've
So
we've done. I'm going to stop talking because I know you got to stop at some point. But we've done work with the tribal organizations, right? A few tribes around the country, and showing them a path for economic development with cannabis. And most of them, they don't have to pay taxes. They can keep most of the sales tax, and so that's also an advantage for competition that some people don't realize. So it is those things are known.
right.
A tribal organization, a non-tribal organization, what you have all those things, and you put in a blender and you get the best business model out of it, and then you just look at the numbers, be accountable, be pragmatic.
So, Jacques, the cannabis regulators listening, operators listening, if they want to talk to you, learn more about what you're doing, pick your brain, expertise, bring you on, whatever it may be, where can they find you? What's the best way to get a hold of you here?
Yeah, thank you. So opuscg.com is our website. My email is jacques@opuscg.com. You'll find it on the website. And just send me a note, an email. Happy to talk to anybody if we can help them. And then of course I go to a few conferences every year. I've got probably one every quarter. Try not to go to too many. And I'm speaking in September at a conference. But anyway, um, website, email. Either me or somebody in my team will be happy to get back to you and help.
Perfect. And Shawn, I'll let you wrap up if you're good, but I just want to make sure that I find time to say thanks, Jacques, for coming on, giving us some of your time to have this conversation, have found it fascinating, has actually learned quite a bit and having this dialogue. And I think that's the whole reason Shawn and I were doing this type of podcast, to have the different voices, to learn these things, to continue that growth and maturation in all different pockets of the cannabis space. So I know you're probably sitting 15 minutes from where I'm sitting right now. I think the last time I saw you was in Las Vegas. So we should find time to get breakfast, get lunch sometime, and hang out.
Yeah, but I want to thank you too for the work you're doing through the podcast, but also what you're doing professionally, because I know it hasn't been easy for me. I know it definitely has not been easy for you guys. and we're all pioneers. The three of us and all our listeners, we are pioneers, and we have to realize that it comes with a cost. So thank you guys for the work you're doing.
Yeah, appreciate that, Jacques. And thank you. I'll just reiterate Erik's point. It's great to have you on. Great to see you again. I always look forward to crossing paths with you and your team. They are certainly top-notch professionals. They are smart, but they also are watching this industry from across every angle and across every market. So thank you for sharing your insight and expertise and wisdom with us and our listeners today. And as Erik indicated, this is exactly why we started this podcast, was to have conversations certainly between and amongst ourselves, but also to bring in folks that, one, we've observed your work, we appreciate your work, but we also think that shedding a light on it and peeling that curtain back a little bit would be insightful for our listeners and trying to bring them some relevance to their work. So we will certainly post ways to get in touch with Jacques and his team. But again, this is exactly why we try to do this as a service to our listeners, however dozen there may be. But again, just thank you again. I guess, Erik, any last words of wisdom for our folks, or do we give them the usual like and subscribe?
Like and subscribe.
All right, folks. Well, again, thank you for tuning in. Hopefully you've made it through the episode. We appreciate you listening. We will plan to bring you more episodes in the near future on very similar topics and with very similar experts that are moving and improving the world of cannabis and cannabis markets across the U.S. and across the world. So, but until then, thank you as always for listening, and we'll see you soon. Thanks, everybody.
The hybrid. The hybrid.